Hello and welcome to another episode of Mama Soup Talks, where we talk about parenting issues. And we've been doing a series with John Law from Jail Bookkeeping. And we've been talking about taxes and how they relate to us as parents with kids and deductions and all kinds of fun stuff. Welcome, John.
Morning.
Morning. Why don't you just let everyone know who you are and what you do?
So my name is John. I'm the owner-operator of Jail Bookkeeping. We provide full service tax preparation, focusing mostly on family and disability related claims.
Yes, excellent. And you've given us so much great information so far. And today's topic might be a little bit technical, but I know that you're going to walk us through it, and really simply, because today we're talking about the tax rules that nobody talks about. And should we say, are these tax rules generally Ontario, national?
All of these ones I'm going to be talking about are at the federal level.
Perfect. So Canada-wide.
Yes.
Awesome. So why don't we start out by let me ask you, what do you mean by tax rules that nobody talks about? Like, who's not talking?
So these fall into two general categories. There's the ones that people just don't know.
Yeah.
The really obscure tax rules that CRA loves to track down and reassess and review. So knowing about these rules, yes, your tax return may not be as nice as you like, but do it right the first time and don't get stuck owing CRA money.
Yes, because you mentioned that last week. You don't want to end up having to pay them back.
Yes, the interest rate on amounts owing from CRA can make it very, very hard to get out from underneath it, especially on a lower income.
All right, so they penalize you.
Yes, they will.
Okay, so you said there's the rules that nobody knows about, and then there's
the ones that people try and say, oh, they'll never catch this, so they'll never notice if I fudge this a little bit.
Yeah,
they know.
Yeah, they tend to. They might not know that exact year, but they'll figure it out, right?
They will figure it out eventually. And if they figure out something on a return from a couple of years ago, the interest starts from the date you filed the return, not the date CRA notices the problem.
Okay.
You could be stuck paying a couple of years of interest on amounts you never knew.
So that those COVID payouts, or what they were called,
all the COVID benefits.
The COVID benefits, they might come back and realize, like,
there is in what's called income matching built into a return. And if CRA believes that there's a reasonable expectation of recouping a COVID benefit, say someone who was on ODSP, OW, or OAS got those one-time amounts, but also claimed CERB or CRB, which they weren't allowed to do.
That's double dipping.
Anyways. That's double dipping, and CRA is going to be looking for their money back.
Yeah. Okay. You don't want to be on ODSP, which is already
is ridiculously challenging.
Yeah, and then to be having to pay them back and their interest.
Yes.
Nightmare. Okay.
Yeah.
So, are there any obscure tax or rules or regulations that parents specifically should know about?
The one I would talk to your kids first about would be for any who are working as a server or anywhere else, a tip may be earned.
Yeah.
Tips are taxable.
Oh.
They are 100% taxable. And once you hit 18, you got to pay CPP on them.
How do they?
It's considered income.
Okay. How do they keep track of, and do people really claim tips?
I ask anyone I see with a T4 from a restaurant.
Yeah.
What do you do in this restaurant? Are you in the kitchen? Are you a server? Are you a hostess? And if they answer somewhere where there's a reasonable expectation of a tip, you better believe I'm asking how much they made in tips.
Okay, that's good to know. So even if you work in a restaurant where they all pool their tips and then split them up.
A tip is a tip is a tip is a tip.
Okay, awesome. Good to know.
Even in Quebec, your tips, like when someone gives you a tip through like the debit, like the machine.
Oh yeah.
And then it gets transferred to your paycheck.
Yeah.
In Quebec, that actually shows on your paycheck and their version of the T4.
Oh.
So you can't hide it.
Okay.
But CRA keeps a list of what businesses are tip producing. And if they see that you're working in one of these places and aren't claiming any tips, they can do something called an arbitrary assessment. In other words, they can make up a number.
They'll just decide.
They can decide that depending on where you're working, that you could have earned as much as 400% of what you declared as income from that job as tips. Okay. Obviously, that would be your high-end hotels.
Yeah.
But it can be anywhere from 75 to 400% of that amount.
Whoa. So if any parent or any kid over 18 is working.
Under as well.
Oh, under as well. So if any parent or any person is working in an environment where they may be receiving tips, claim your tips.
Claim your tips.
Or the government will may tell you what they think.
Yes. CRA has the magic power to make up numbers.
Yeah, do they ever?
And it is rarely in your favor.
So that's one example of a rule parents and kids should know about. Is there any others that you can think of?
This isn't these next two are very difficult topics to talk about. One is related to incarceration. So if you were incarcerated, or even if you were in a mental health facility for an extended period of time, whoever's doing your taxes needs to know that. A lot of credits like GST and Trillium, even climate action incentive, cannot be claimed if you were imprisoned or in a mental health facility for a certain period. Okay,
that's interesting. I can see the imprisonment, but the mental health facility, I don't really.
Yeah. It's because the mental health facility is because those facilities are funded in the same basic way as a prison through the government.
Okay.
You don't really have any ongoing expenses like rent or food.
Okay. When you put it that way, it doesn't make sense. You wouldn't need to claim GST that you didn't necessarily spend. Or
yes, because the purpose of the GST credit is to provide you a rebate on some of the GST that you were paying through your purchases.
Yeah.
In a store. And if you're in a mental health facility or a prison, you're not really spending that much on GST.
That's right. So understood. So if you're in prison or if you are in a mental health facility, let your tax preparer know.
Yes.
Okay.
The last thing you want is your credits like Trillium and GST, HST overcalculated. And again, you get stuck owing the money back.
Yeah. You don't want to get out of one of those situations and have to owe the government money too.
Exactly. The other one is more focused on the parents.
Okay.
So when a relationship breaks down, either divorce or separation. The exact date is important. There is a 90-day window that they allow for reconciliations.
Okay.
So we need to know when the breakup was so that 90 days calendar can start ticking.
So say you have...
And again, it goes back again to calculation of credits and transfers that you want calculated correctly the first time.
Okay, so, and what you mean by the date that you broke up? You mean like the date that the one parent walked out the door or the date that you legally separated?
It's the date that, so the clock starts ticking the day the physical separation happens.
Okay, perfect.
Then you have that 90-day window to reconcile. Once that 90 days is up, you're either considered separated or divorced, depending on what legal process you've gone through.
Yeah. Okay.
The other thing related to that is that in the year that 90 days ends, you will need to know your ex's net income, which is a very difficult discussion to have.
Yeah, it's
especially in that first year when things are probably still pretty tense. It's not nice having to go back to your ex and say, how much you make this year?
Yeah, maybe find that out before you split up.
Have a general idea
yeah.
of what your spouse is making. Worst comes to worst, you can estimate, but estimate high.
Okay.
Again, so credits get calculated based on that higher income. If it's found to be lower, the credits are going to work out in your favor. If you underestimate and it's found to be higher, the credits are going to work out in CRA's favor.
And then you're going to owe money.
And then you're going to owe money.
Yeah. That's some really good advice, actually. So try to figure all that out. And if you're not 100% sure, just add a little bit of a cushion.
Yes.
Okay.
Like you should be, if there's like a formal child support arrangement and going through all that process, you should be able to have that that information pretty easily. But if that's still ongoing or for some other reason you don't have that exact number, you either have to get that exact number somehow or overestimate.
Okay, excellent. So you've given those 3 examples of things that parents need to know about these special tax rules that nobody really tells you about.
Got one more about childcare, and there's a couple really cool medical tricks that people generally don't know about. So childcare, under 99% of circumstances, it will be claimed or has to be claimed by the person with the lower net income.
Okay.
Unless the person with the lower net income is in prison or a mental health facility or going to school or has a disability, it has to be claimed by the lower. In those few circumstances, it can be bumped over to the higher, which again goes back to letting your tax preparer know that I've been in prison or I've been in a mental health facility.
Yeah.
Because it can affect who the childcare is claimed by.
So I guess some parents would try to get the parent with the bigger income to reduce their taxes if they claim the childcare. Okay.
Yeah.
All right. So don't try to fudge the system that way.
No.
They're going to
CRA watches for this.
Yeah. Okay. All right.
And it's even on the childcare claim form.
Okay.
You have to say why the person with the higher net income is claiming it. So for medical, medical expenses are generally best pooled all onto one of the parents' returns.
So medical expenses for all the dependents?
For all the dependents as well.
Okay. Okay.
Because it's usually the parent paying those medical expenses.
Mm-hmm.
Like even a child who's working is not going to go out and pay for their own glasses.
No.
It's not a reasonable expectation.
No.
Unless there's a huge need, medical should go to the lower income.
So the lower income parent can also, it could be the higher income parent that claims?
It's based on who it's really more beneficial to.
Okay.
The reason it's generally more beneficial to the lower income is that for medical, you have to clear a certain threshold. It's just under $3,000. So if your medical is under that limit, you can't even claim it at all.
Okay.
And you can only claim the portions that are above that threshold. So let's say, for easy math, let's say the limit is $3,000. Let's say you have $2,200 worth of medical receipts. So prescriptions, glasses, in some provinces, massage therapy. None of that is going to do you any good.
Oh.
Because it's not above that threshold.
Okay.
You have to clear. It's either that 3,000 or 3% of your net income.
Okay.
Is that threshold. So unless you're above that, it's not going to do you any good.
Okay.
Once you hit that threshold, so let's say this person's threshold is $3,000 right on the money. This person has $4,500 worth of medical expenses to claim. They can only claim the $1,500 that is above their threshold.
So even once you reach the threshold,
it's basically like tearing a scale.
Mm-hmm.
It starts at zero at that point.
Mm-hmm. Okay. All right. So that's good to know.
And the other major thing for medical.
Yes.
This kind of goes more in the opposite direction where you have a huge amount of medical expenses in a year. Let's say you got a family of 4.
Mm-hmm.
All of them needed glasses in the year.
Mm-hmm.
So you're probably looking between exams, classes, and all that other stuff, probably close to $3,000.
Mm-hmm.
Just for those 4 pairs of glasses and the exams, and all the other fun stuff. And you already have prescriptions and all that other stuff that bring you up to your threshold.
Yeah.
There can be a point where you don't need to claim any more medical to get your taxes right down to 0.
Oh.
So you may only need your prescriptions, maybe a bill for a massage therapist, and maybe, let's say, one of those person's eye exam and glasses.
Mm-hmm.
So you can claim those on 1 year's return.
Okay.
This is an awesome rule. I love it. Your medical year end. What would you say a medical year end is when a medical year ends?
I would assume it's December, like starting.
Yeah, December 31st, right?
Yeah.
Your medical year can end on any day in the tax year you are filing for.
Okay, say that one more time.
So the medical year end can be moved from December 31st to any day during the tax year you are filing for.
Okay.
So for 2021, by default, the year end is December 31st, 2021. You can move it as far back as January 1st.
And claim.
So you can take those class expenses that you didn't need on your 2020 return, and as long as they're on different days from that one you did claim, you can pull them into your 2021 medical year.
Whoa.
Yeah, big game changer.
Wow.
So maybe you didn't have as many prescriptions during 2021 and you didn't have that massage therapy bill anymore. Now you've got this room to clear and use the rest of those classes expenses and get you right up and hopefully over your threshold.
That's awesome.
Yeah, there's a great rule.
That's good to know about, especially for families.
Yes.
I know there's out of the 6 people in my family, 5 of us wear glasses, so that's good to know.
Yes.
So why do they make these rules so hard to figure out? And are they doing it on purpose so that people don't know?
I don't think I'd go saying that, like as far as saying that.
Yeah.
I think it relates more just to a lack of general public knowledge.
Yeah.
On some of these topics.
Oh.
Like, who really wants to talk about having been in prison or in a mental health facility?
Yeah.
They're difficult topics to talk about, but like the rest of everything related to them, they have impact on your life. That extends into your taxes.
Yeah. I think that's another good example of why it's important to have somebody who knows how to navigate all of the system to do your taxes for you. Because I mean, I can't imagine how many people out there are doing their own taxes and they're missing a lot of this stuff, or they're finding themselves in trouble and owing good people that just didn't know.
Exactly.
Yeah.
Making honest mistakes that just come back to bite them.
Yeah. How can regular people who aren't familiar with all the rules, how can we find out this stuff other than talking to someone like you who knows?
So there are guides on canada.ca.
Okay.
Under forms and publications. They are dry. They are wordy. They are technical.
Yeah.
They have tried to simplify the language, but there are just some aspects of taxes that cannot be put in simpler terms.
Yeah, I get that. That's why we have people like you to help us get through it. So obviously having a professional tax return done can help you avoid these mistakes, making mistakes. And is there any other rules or things that you had wanted to talk about? Those are some doozies.
This one it's an option for Ontario residents. So in Ontario, we get the Trillium Benefit, which comes a lot from either rent or property taxes, being a major factor in bumping that up. Very, very few people know this, but you can either receive your Trillium throughout the year, so monthly as it normally comes, or you can pool it for the year and get a single payment at the end of June.
Oh, okay.
So I've seen people use that second option, pooling it up. Their birthday is in June. So they take the one-time Trillium in June and they use it to do something nice for their birthday.
Oh, that's nice. So how often does Trillium come out?
So Trillium is monthly.
Monthly, okay.
Unless you elect to take the one-time payment.
Yeah, okay.
And in that case, you get it at the end of the Trillium cycle for the year.
Yeah. Okay. That's good to know.
So I've seen a person, like I said, put it towards something nice for their birthday. I've seen it used to do kind of an end of school year celebration. I've seen it used to be put right back against taxes.
Okay, yeah.
So they know this year may be a little bit wonky for me.
Yeah.
So I'll take the one time.
Just in case.
Just in case. And then I will have that money that I because I don't receive it through the year, I'm not missing it. I'm not relying on it.
Yeah.
And you can dump it right back into your taxes.
Yeah, that's also a great option for people who aren't really that good at saving.
Yes.
You can just help build up.
Yes.
Like, how much money are we talking?
Trillium is very, very variable. It depends on your income. It depends on how much rent or property tax you pay. There's just too many factors.
Okay. All right. We won't get into those technical details.
No. Sorry, there was one other that just floated through my mind just now. I've lost it.
Lost it.
It was a good one too.
It floated straight through.
Yep.
Well, these have been very, very good, useful things that people can take and talk to their tax preparers about.
Yes.
And maybe even at the end of the year, if they save up their Trillium, they can use that money to pay the person that's going to do their tax return.
Some people do that too, although tax returns need to be done in April by the end of April. So doesn't really help.
Yeah, so let's just talk about that. So tax rules that nobody talks about. So we've learned quite a few here today, but can you just go over the deadlines for taxes? Okay,
so the start of tax season really is kind of late February. T-slips obviously have to be to you or in the mail by February 28th or 29th.
Okay.
A leap year.
Yeah.
So they either have to be in your hand, available to you online, or at least in the mail to you by the end of February.
Okay.
There's big fines for employers that miss those deadlines.
Okay.
March and April are the two main months to file your taxes. April 30th at 11:59:59 is the cutoff.
Okay.
Starting at May 1st, exactly at midnight, if you owe any money, like if you have a balance owing, interest starts right at midnight.
Okay, good to know.
So if you suspect you may have a balance owing,
pay it.
Do not be late. Then we get into the mess of if one of the spouses is self-employed. This one I would hope you're aware of yourself. The filing deadline for self-employed is June 15th.
Yeah.
But your spouse who is not self-employed still needs your numbers in time for their April 30th filing. So in effect, while you may technically have till that June 15th, do not wait that long.
Yeah.
Get your return done in the same period. Do it at the same time as your spouse. I'm very, very hesitant to do a set of returns for spouses unless I have all the information for both. Okay. There's just too much information that talks back and forth between the returns.
Yeah.
You don't want to be filing an adjustment for $5.
No. No. And actually, That's that's the truth.
The other date to be aware of, and a reason I would push a return more into late April, is that two factors: RSP contributions.
Yeah.
The contribution period for a given tax year is actually the 61st day of that year to the 60th day of the following year.
Okay.
So typically March 1st of the tax year to February 29th or 28th of the next year.
Okay. Okay.
So those slips don't even start coming out until the last week of March. And with RSPs being such a great deduction, I don't want to miss out on your return.
No.
So if you have a history of RSP contributions in that first 60 days, I'm not even looking at your return till April.
Okay, but still get in touch with you.
Yes, and let me know.
Yeah.
The other thing to consider is if you have like investments, so stocks, bonds, mutual funds, those slips, their deadline to be out is the end of March. So again, I'm not even looking at your return until those last 2 weeks of April, because I don't know I have all your slips.
Yeah. So it's a busy month.
April is insane for tax preparers.
Yeah.
That's when we basically hide in our offices and say to our spouses, see you in May.
Yeah, seriously. So then this has been really, really interesting. I think that we've learned some things today that especially I didn't realize about, that you could bank your Trillium payout. So that's kind of cool. And the medical tax rules are kind of cool to know about. Is there anything else that you can think? I mean, there's obviously all kinds, but just the rules that would have.
They're getting, from here on, they get even more technical and are very, very specific to certain cases. Like electing to pay CPP on self-employment.
Okay. Yeah. I mean,
that gets really, really technical and doesn't affect a lot of people. So not something I'm really going to go into here, because that's a 2-hour discussion on its own. Yeah.
Well, I really do appreciate your time and your information. And can you just let people know, other than I'm going to link to your website and your email in the comments section. Can you just tell people like when to reach out to you? And
it is never too soon to start talking about your tax return for a year.
Yeah.
I would even consider this time frame late.
Yeah. Okay.
Ideally, I like to start making people think about their taxes second half of November.
All right. Good. That's good to know. But never too late, but never too early also.
Exactly.
So reach out to John at JL Bookkeeping, and he can help navigate through your tax returns. Thanks a lot, John, for joining me.
Not a problem.